in terms of cryptocurrencies generally, I can say almost with certainty that they will come to a bad ending. Now, when it happens or how or anything else, I don't know. But I know this, if I could buy long-term...
Don't invest in Bitcoin. Warren Buffett's opinion. This year has been an important one for Bitcoin and for cryptocurrencies in general. Not only did Bitcoin prices hit an all-time high of over $63,000 in April, but it has also made some big steps towards mainstream acceptance. These include PayPal adoption and the first 100% crypto Visa transaction. While its price has fallen considerably in recent months, Bitcoin is still up over 300% from this last year. That said, Bitcoin still has some of the biggest high-profile critics. Hello and welcome to our channel Money Invest, and today we'll be discussing Warren Buffett's golden advice on why one should never invest in Bitcoin. Join our channel by hitting subscribe and clicking the bell icon to be updated on our new uploads. Without further ado, we'll introduce you to a highly influential businessman. After a bully first quarter of 2021 that led to an all-time peak of $63,000 per unit in mid-April, the world-leading digital currency has since lost more than 40% of its value, settling at just over $43,000 on Friday, January the 5th. Holdout investors who only a couple of months ago may have thought they'd missed an opportunity of a lifetime are now sighing with relief. Meanwhile, those who bought in at the peak are trying to think about their losses, or rather not think about them. And what about Warren Buffett? What would the world's most famous investors say to those who might be thinking of firing up their investment apps and buying Bitcoin at a bargain price? It's probably rat poison squared, Buffett once said. While Buffett chose not to comment on cryptocurrency during his company Berkshire's annual shareholders meeting earlier this month. Berkshire Vice Chairman Charlie Munger pulled no punches on the subject. "I don't welcome a currency that's so useful to kidnappers and extortionists," Munger said during the meeting's much-watched Q&A session. "The whole damn development is disgusting and contrary to the interests of civilization." Not to be outdone, Buffett has made his share of extremely cutting remarks about Bitcoin and cryptocurrency over the years. "I don't have any Bitcoin, I don't own any cryptocurrency, and I never will," he told CNBC in 2020. Warren Buffett has been vocal critic of Bitcoin in recent years, repeatedly dismissing the cryptocurrency as worthless and risky speculative asset. Crypto fans have brushed off the billionaire investor and Berkshire Hathaway CEO warnings, driving Bitcoin's price up as much as 350% to record highs over the past year. And here are the top 3 reasons why Buffett won't go near it. Number 1, it doesn't have any intrinsic value. The billionaire investor doesn't like Bitcoin because he considers it as an unproductive asset. Buffett has a well-known preference for stocks or corporations of value, and cash flow come from productive things and producing things. But cryptocurrencies don't have real value, Buffett said in a CNBC interview in 2020. Warren Buffett likes companies and assets that generate value in and of themselves. For example, if you invest in a farm, there's value in what the farm produces each year, even if the stock itself does not gain value. If you buy something like Bitcoin or some cryptocurrency, you don't have anything that's producing anything, Buffett said a few years ago. He told Yahoo Finance, "You're just hoping the next guy pays more, and you only feel you'll find the next guy to pay more if he thinks he's going to find someone that's going to pay more." This is the same reason that Buffett doesn't like gold. Though Bitcoin is intended to provide real value as a payment system, that use is still pretty limited. As Buffett sees it, Bitcoin's value comes from the optimism that someone else will be willing to pay more for it in the future than you're paying today. We value your enthusiasm, so don't forget to subscribe to the Money Invest YouTube channel and ring the bell to be informed of new episodes, and keep watching. Number 2, he doesn't think crypto counts as money. One of the reasons for the concern over cryptocurrency bubble is that many people are buying cryptocurrencies without fully understanding the technology behind them. With over 10,000 different cryptocurrencies currently on the market, a large number of those coins are likely to fail. And as investors, building an understanding of what blockchain can do and how it works is one of the ways you can start to pick the wheat from the chaff. As a tradable asset, Bitcoin boomed, but does it meet the 3 criteria of money? According to the most common definition, money is supposed to be a means of exchange, a store of value, and a unit of account. But Buffett calls it a mirage. It does not meet the test of a currency. The billionaire said on CNBC in 2014, "It's not a durable means of exchange. It's not a store of value." Buffett did not initially jump into tech stocks like Apple, Facebook, or Microsoft for the same reason. That doesn't mean those stocks were bad investments, simply that his tried and tested investment strategy led him in a different direction. Cryptocurrencies are just one of the many ways you can invest your money, all with varying degree of risks. What matters is to set your own goals and work out the best strategy for you. He adds that it's a very effective way of anonymously transmitting money. But a check is a way of transmitting money too, he said. Are checks worth a whole lot of money just because they can transmit money? Number 3, he doesn't think it works as a currency. Buffett became one of the most successful investors in history by sticking with stocks he understands. He also mentioned, I get in enough trouble with things I think I know something about. Why in the world should I take a long or short position in something I don't know anything about? When Bitcoin first launched in 2009, it promised to be the world's first decentralized digital currency. It opened the way for you to transfer money to another person without needing a bank or government to support the transaction. Buffett told CNBC that it will never work as a currency. It's not a durable means of exchange. It's not a store of value, he said. It's an understandable perspective. Indeed, one of the reasons Bitcoin has spawned so many other cryptocurrencies is that it isn't a great digital currency. Even billionaire investor Mark Cuban, who holds 60% of his crypto portfolio in Bitcoin, says it's too slow and cumbersome to work as a currency. He does, however, see value in Bitcoin as a store of value. So, what should we do now? Follow your investment strategy? Buffett hasn't gone quite as far as his right-hand man, Berkshire Hathaway Vice Chairman Charlie Munger. Indeed, Buffett shied away from criticizing Bitcoin recently because he doesn't want to upset the tens of thousands of Bitcoin investors. Munger has no such qualms. He told the company's annual meeting this year that he wasn't interested in a currency that's so useful to kidnappers and extortionists. He stated that the whole damn development is disgusting and contrary to the interests of civilization. Whether you agree with Buffett and Munger comes down to your situation. Perhaps you understand blockchain technology and are confident about Bitcoin's future. Perhaps you're comfortable with the idea of buying a non-productive asset, or perhaps you want to diversify a small amount of your portfolio into cryptocurrencies. Only you can decide what's right for you. One Buffett lesson that's worth taking to heart is to only invest for the long term. That means if you do buy Bitcoin, you should do so because you believe it has long-term value. This year alone has shown us how volatile the price can be. It doesn't make sense to jump in hoping for short-term gains. You could just as easily lose everything. Bitcoin has made a lot of people rich along the way, but that doesn't mean you've missed the boat on investing. Just listen to Buffett's words of wisdom. The most reliable way to make money in the market is through a balanced, diversified portfolio of stocks, bonds, and ETFs. And luckily, a new wave of investing apps make it easy to pursue such a strategy. One popular app will even automatically invest your spare change on debit and credit card purchases. There's also more to investing than the stock market. Thanks to new technology, you have unprecedented access to a host of interesting opportunities. You can even invest in US farmland and whatnot. And now that we've reached the end of the video, but wait, make sure you leave a like and subscribe so you can join the Money Invest Squad and be a part of the channel. Thanks for watching the video.